We're going to do a quick video on SP500 bear market. We have a daily chart up here, the S&P 500 E-mini futures contracts. We're taking a look at that just to show a point here real quick that we want to get across. Let's back up here real quick and take a look at this contract. We can see back here in June of 2020 we crossed this 200-day moving average. We've got three moving averages on here: a green 5-day, a red 20-day, and a blue 200-day moving average. And we saw a cross and a support of the 200-day moving average back in June of 2020. And as you can see, we maintained a steady gap and a good rally all the way up here to roughly 4,800. From November 20 all the way up to September 21, we had essentially just a straight up bull market. It was beautiful. When we got to close to our top here, we put in a little bit of a test. Didn't get that close to the 200-day moving average, and we rallied on up to the 4,800 level. You can see at that point, right around January of 2022, we got a really hard break, a violation of the 200-day moving average. In addition, the 200-day moving average started to roll a little bit. We started seeing it flattening out, and we got distribution right through here at around the 4,400 level, and you could see we oscillated back and forth above and below the 200-day moving average as they tried to decide whether this bull market was over. And in fact it was. We got decisive closes and kept them below the 200-day moving average. This was your real signal to be careful, because this is a deep penetration below the 200-day moving average, and we got a good solid confirmation that we were in a bear market from this 200-day moving average. You can see that it was respected all the way from about 44.80 all the way down to 3800, which is an incredible move. And you could have just stayed short just based on this 200-day, this 20-day moving average, this red line right here, without any serious stomach problems. Of course, it's all for entertainment purposes only, but that's what the line shows me. You could have just got short and stayed short on these futures contracts and been in good shape. As you can see, we began to get choppy here in May of 2022. We violated the 20. Broke back down with a gap. These gaps in the futures contracts are extremely concerning. You want to be very, very careful of gaps in the futures markets, because sometimes they can really run on you. But we put in a bottom down here in mid-June of about 36 and 39, roughly 36.39 was a low, it looks like, and then almost without too much correction, a basic solid rally right up to the 200-day moving average. We bounced off that 200-day moving average like it was a brick wall on the 16th of August, and as you can see, we're selling down. Now, what does all this mean? It means the SP500 is still in a bear market, and that's because we're still below the 200-day moving average. We failed to penetrate it. We bounced right off of it, again, like it was a brick wall. And we're also, as of the third day now, below the 20-day moving average, and we're about to get a crossover of the 5 below the 20-day moving average, which, if it happens and we get follow through of a rollover of the 20-day, we're going to come down here and test these lows in the S&P 500 futures contract that we're using as a proxy for SP500 at about the 3,800 level around mid-September, or roughly thereabouts. We're probably going to come down here and test. If we do not get a rollover of the 20-day, and if we don't get a follow through on the 5-day, we're probably only going to come down here to about 4,000 at the lowest, and that would probably happen around first week in September, maybe not even 4,000, 4,050, and then we would rally up for another test by the end of September, 3.5 weeks or so into September, rally to test this 200-day moving average. So that's what I see going on right now, potentially down to the 3,800 level, and if not, if we get a stop here soon in the next couple days, a rally up to the 4280 level as we test the 200-day moving average. In order to get out of this SP500 bear market, we need to close decisively above the 200-day moving average. We need to have support from the 20-day moving average. So you would expect to see something like this, but above, something like this move, but above the 200-day moving average. Until that happens, we're still officially in a bear market. Keep in mind, we're using the S&P 500 E-mini futures contract as a proxy, but pretty much that's going to be a very good proxy for the SP500 and its current bear market. Let's take a look down here what RBAM Research says about it. We cover SP500 futures right here. put them out every day, Monday through Friday at 7 a.m. These are algorithmically generated prices. For the futures, we offer both longs and shorts. Again, this is the ticker symbol ES, Chicago Mercantile Exchange, SP 500 E-mini, put out this morning, indicates we have 1, 2, 5, 10, and 20-day hold periods. These are worst case holds, so enter today, close out worst case on the next trading day, and so forth. If you did a 20-day, you'd enter today and close out worst case at the 20 holding day period. That would be at a loss. You take your profits as soon as you get them. So if you got in today and got a profit, you take it. If you got in for a 20-day hold, got a profit today, you take it today. Worst case, you close it out again after 20 trading days, and so forth for each one of these columns respectively. Let's take a look what it says. We don't usually have shorts on the one-day holds for the S&P 500, but we usually do have either buys. We usually have a buy on the one-day holds, but we usually don't have shorts. So we have a 2-day for the short today. So this will be a 2-day hold at 41.61. And let's go up and see if it's hit that 41.61. And let's see. Look, we went to 41.58 and we sold off, so we have not hit it yet. So we'll see what happens. 41.61 is our target. We've only gone to 41.58. You know what? That's not. These charts aren't updated. Let me take a look and see what's going on here. Let me see if I can update this chart. No, it didn't update. But that looked like that chart was a day behind. So our buy price or short price for today for the futures, again, all listed here. You can get these yourself every morning before 7 a.m. Monday through Friday at rbamresearch.com. They're for entertainment purposes only. You should never use them for anything other than entertainment. You have to use your own analysis. And of course, everything on here is our own opinion for entertainment purposes only. But you can get them at rbamresearch.com, and they're 100% free, no credit card required. rbamresearch.com, there's a link in the description below. You just go there and sign up and you can get them before 7 a.m. Monday through Friday. In addition to the futures, we cover 190 stocks. We cover the major forex pairs. We cover BTC crypto. And in addition to the S&Ps for futures, we cover crude oil, gold, and treasury bonds. Again, no credit card required, absolutely free. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a great comment on how we can improve these videos, we'd love to hear it in the comment section below. And keep in mind, everything you've seen and heard on here is for entertainment purposes only. It's all in our own opinion, shouldn't be used for anything other than entertainment, and you definitely trade at your own risk.